Good morning, everybody, and welcome to this week's installment of the Net Lease Beast Weekly Recap, where we look at the top 3 stories affecting the net lease real estate market each week. Dollar General and Dollar Tree last week reported first quarter results that topped expectations and confirmed that Dollar General remains on track to open 1,050 new stores, remodel 1,750 locations, and relocate 100 stores in 2021. In the quarter ended April 30th, Dollar General said that it had executed more than 800 real estate projects. That's 260 new stores, 543 remodels, and 33 relocations. New Dollar Generals are trading in the high 5, low 6% cap rate range for a new 15-year triple net lease at a price point most commonly seen between $1.5 million and $2.5 million. President Biden's proposed cap on Section 1031 like-kind exchanges would drastically curtail economic activity and effectively cripple commercial real estate markets, according to a new analysis by Ernst & Young using the Federation of Exchange Accommodators data. EY says that current 1031 exchange code will add 568,000 jobs and $27 billion in labor income to the national economy in 2021 and generate $7.8 billion in federal, state, and local income taxes this year. The current proposal from the Biden administration is to cap gains under the 1031 exchange at $500,000. Julie Baird, president of the Federation of Exchange Accommodators, says a cap on like-kind exchanges would effectively eliminate Section 1031 and cripple the commercial real estate market. Many large commercial properties such as hotels, office buildings, and retail spaces need to be reimagined or renovated as a result of the pandemic. These exchanges generate jobs for people such as contractors, construction workers, and building material suppliers, and many more. Without Section 1031, people will simply hold on to their properties instead of repurposing them. It's worth noting that between 10 and 20% of all commercial real estate transactions incorporate a 1031 exchange in the United States. Finally, 7-Eleven just announced that it will build 500 electric vehicle charging ports on 250 of its locations by 2022. 7-Eleven already has 22 charging stations at 14 locations in 4 states, so this ambitious new endeavor will be a huge step toward renewable energy from a company whose sole business model has been selling gasoline for decades. This isn't 7-Eleven's only push toward a sustainable future, mind you. In fact, in Texas alone, over 800 stores are being run off 100% wind energy, 150 stores use hydropower in Virginia, and 300 stores in Florida are run on solar power alone. Needless to say, the company is making huge strides in a world that is shifting toward renewable energy each day. If you own or are interested in owning a 7-Eleven store, they're currently trading at between $3 and $6 million and in the mid 4% cap rate range. For more information on these stories and many more, visit thenetleasebeast.com and subscribe to our weekly newsletter, where I personally put these stories and more into your inbox every week, along with a few other treats as well. You're also welcome to reach out to me directly if I can help you regarding any of your real estate needs. That's all we have for today, and we'll see you next week on the Net Lease Beast Weekly Recap.